Is the US dollar entering a dangerous period, and why is Bitcoin gaining attention? The continuing US-Iran conflict is creating more than a geopolitical crisis. It is also placing additional pressure on America's government finances, inflation outlook, and currency. As the conflict continues, investors are becoming increasingly concerned about rising US debt, higher borrowing costs, and the long-term purchasing power of the US dollar. At the same time, Bitcoin is gaining attention as a scarce, non-sovereign asset that operates outside the traditional monetary system. Could these developments gradually change how investors protect their wealth? War is becoming increasingly expensive for the US. A prolonged conflict requires enormous expenditure on military operations, replacement of weapons, protection of shipping routes, and support for regional allies. Because the US government is already running a substantial budget deficit, much of this additional expenditure may ultimately have to be financed through further borrowing. US federal debt has already exceeded approximately $40 trillion. The Congressional Budget Office also projects that federal debt held by the public could increase from around 101% of GDP in 2026 to 120% by 2036. The danger is not simply the size of the debt. As older Treasury securities mature, they may have to be refinanced at higher interest rates. This increases the government's interest expenses, enlarges the budget deficit, and creates a need to issue even more debt. In simple terms, higher debt leads to higher interest expenses. Higher interest expenses create larger deficits, requiring more borrowing, and the cycle continues. The Strait of Hormuz creates an inflation problem. Disruptions around the Strait of Hormuz have affected one of the world's most important energy routes. Higher oil prices do not only affect such petrol, they also raise the cost of shipping, aviation, manufacturing, electricity, food, and fertilizer. Businesses may eventually pass these additional costs to consumers. This creates a painful dilemma for the Federal Reserve. If the Fed keeps interest rates high to control inflation, economic growth may weaken, and the US government's borrowing costs will remain elevated. However, if it cuts interest rates too quickly to support the economy, inflation could return, and confidence in the US dollar may deteriorate. This combination of weak economic growth and persistent inflation is known as stagflation, and it is one of the most difficult environments for policymakers to manage. Why could the US dollar be in a dangerous position? The US dollar is not likely to collapse suddenly. It remains the world's leading reserve currency and is supported by America's deep financial markets, global trade networks, and highly liquid treasury market. However, its long-term purchasing power may become increasingly vulnerable. Some foreign central banks are also diversifying their reserves into gold and other currencies. Nevertheless, this should not be mistaken for an immediate abandonment of the dollar. The dollar still accounts for approximately 57% of disclosed global foreign exchange reserves. The greater risk is therefore not an overnight collapse of the US dollar. It is a gradual reduction in its purchasing power and international dominance. Why Bitcoin is becoming more relevant. Bitcoin has attracted greater attention as concerns grow over government debt, inflation, and the long-term purchasing power of traditional currencies. Unlike the US dollar, Bitcoin cannot be issued in unlimited quantities. Its maximum supply is fixed at 21 million coins, with new supply introduced according to a predetermined schedule. Bitcoin is also not issued by a government and does not represent the debt or financial liability of any country. This gives it a different role from traditional currencies, government bonds, and other financial assets. Bitcoin is still considerably more volatile than gold, and its ability to behave consistently as a safe haven asset has not yet been proven across multiple economic and geopolitical crises. Can Bitcoin replace gold? Not yet. Gold has thousands of years of history as a recognized store of wealth. It is widely held by central banks and generally experiences less price volatility than Bitcoin. Bitcoin, however, offers several characteristics that gold cannot provide. It is digitally transferable, globally accessible, highly divisible, and limited to a maximum supply of 21 million coins. Their behavior during a crisis can also be different. During the initial phase of a war or market panic, investors often sell volatile assets and move into cash. Bitcoin may therefore fall alongside equities during the first market shock. Bitcoin could perform better during the later stage, particularly if governments increase borrowing and central banks begin cutting interest rates or injecting liquidity into the financial system. Gold may therefore provide greater stability during the initial crisis, while Bitcoin may offer higher potential returns during the subsequent monetary response. Rather than viewing Bitcoin and gold as direct competitors, investors may consider them as two different forms of protection. Gold offers an established history and greater stability, while Bitcoin offers scarcity, portability, and potentially higher long-term growth. The important risks: despite its potential, Bitcoin should not be treated as a guaranteed safe haven asset. Bitcoin's limited supply does not guarantee that its price will rise. Investor demand must continue expanding for scarcity to translate into higher value. The reasonable conclusion is not that the US dollar is about to collapse or that Bitcoin will immediately replace gold. The more important concern is that America's rising debt, growing interest expenses, war-related expenditure, and inflation constraints may gradually weaken the purchasing power of the dollar over the longer term. Bitcoin offers investors a scarce, global, and non-sovereign alternative that may benefit from this development. Its growing accessibility and institutional participation also suggest that it may gradually develop into a recognized monetary asset. However, Bitcoin remains considerably more volatile than gold and should be viewed as a portfolio diversifier, not a complete replacement for cash, bonds, or precious metals. For investors who believe in its long-term role, dollar cost averaging may be more appropriate than committing a large lump sum during a period of geopolitical and market uncertainty. The future may not require investors to choose between gold and Bitcoin. A diversified portfolio could hold both: gold for stability and established crisis protection, and Bitcoin for scarcity, portability, and higher long-term growth potential. This article is intended solely for general information and educational purposes. It does not constitute financial advice or a recommendation to buy or sell any investment.